Hello and welcome to the Weekend Investing Daily Bite of December the 11th. And a very dull day today, Nifty not moving either way by any major distance, and just waiting for some more cues. So we have now consolidated 4 days in a row, and the market is awaiting new cues to make a move. It's not going down, it's not going up, but I think the path that it is on is currently in a you can say a intermediate uptrend, and that is what the continuation should happen in a few days. In terms of the today's discussion, we will have a discussion on this massive warning that SEBI is giving, and we'll discuss more about this in the second half. Please watch it for this warning. Um, Disclaimer, as always, please read the disclaimers, do subscribe to the channel and click on the bell notification. The Nifty chart, absolutely dull and listless. 0.13% gain on Nifty. You can see the last four candles right here, all very short candles. A short candle means that the market is in a tight range. The high and low of the day is within a tight range, and there is sort of market is in a sort of an equilibrium right now. It's just moving around very little around the center point, and then something will cause this equilibrium to break, and the market will have to move to a new price point where it'll seek some equilibrium. So the if you study the patterns of the market, you will find that it is a process of going from one state of equilibrium to the next state of equilibrium, and there is volatility in the middle. So you'll go from here to here, and then here to here, and here to here, and so on and so forth. So right now, it seems we are consolidating at this current place, and to the best of my thinking, I think we are due for a upward continuation of this trend unless something new breaks out. Uh, and the next move probably should take this to about at least to this pivotal level, which is about 25,200. So we are about, I would say, 600, 500 to 600 points away from the next equilibrium point. Let's see how and when we get there. The Nifty next 50 moved up 0.27%, gradually inching up. So this is not staying at one place, but inching up on a day-to-day basis, which is decently desirable. Mid caps also 0.32%. So gradually, with very small baby steps, mid caps have recovered all the ground that was lost in the last 2 months. So we were at the same point beginning of October, and we are at the same point here now. So those portfolios who would have thrown away their positions are now, probably regretting those decisions. But market is now ripe for exactly trying to, maybe give another shot at this previous all-time high. Small caps, another day and another small move up 0.2% percent again here. So we are now very close to the top of the small cap moves, what we have seen over the last 3-4 months. It may not break so easily. It may consolidate here, may try to even shake out some weak hands and then possibly go up. So if it suddenly goes up, that would be a surprise actually. But a fantastic recovery from 16,600 to 18,500 didn't even get into notice, and almost 2,000 points is on the board. Bank Nifty, just like Nifty, not really doing anything today, minus 0.35%, again within the range, the last four candles being very, very uh, small in terms of moves. Gold in US dollar terms is doing well. Gold broke out yesterday of this downward sloping trend line. And today also it came down and retested this breakout line and went back up. So this is so far a good sign. And only the breaking back of this trend line downwards will really cause any weakness. Otherwise, we are headed towards 2720 and 2785 in the short and medium term. Momentum trends, again, almost equal gains to losses, 275 gainers, 222 declines. So while slightly biased towards the green, but largely equal balanced. Heat maps, Reliance and State Bank losing 0.5% each. NTPC, Adani Ports, JSW Steel also losing some ground. Infosys, Bajaj Finance, Shriram Finance, Trent. Uh, these were the stocks that were going up. ITC levers flat. Nestle up 1.2%. Nifty Next 50 had more of red, I would say. So DMart, Zomato, Adani Green, PNB, LIC all lost ground, but there was some pickup in the public sector finance company. So IRFC was up. You also had uh, BHEL up from the public sector space. You also had IRCTC up. Havels was up, and ICICI probably was also up. In the sectoral trends, nothing much to talk about, but PSU banks lost 0.9%. Energy and private banks also lost some ground. Rest were all flattish. FMCG and consumption recovered some of the losses of the last week or so. FMCG is still in loss for the last week or month. Consumption stocks are slightly picking up, but that remains a big concern in the markets going forward. MNC stocks like United Breweries, ABB, Colgate Palmolive, Honeywell, etc. gained. This segment is coming back a little bit, but still not yet out of the woods from any perspective. In the stock spotlight, you had PNC Infra doing very well today, up 12.3%. So while it has lost some ground in the recent few months from 600, near 600 rupees to nearly 300, it is now looking like it is wanting to build back up, and one could look for setups in this stock on dips. So let's now discuss this massive warning by SEBI. What is this all about? So this warning is about unlisted securities. And prime example of this was with this MobiKwik uh, IPO. MobiKwik was trading as high as 1200 rupees in the gray market. And the IPO that has been announced in the range of 265 to 279. So just imagine you having bought in the gray market at 1200 rupees, and now the IPO is coming out at sub 300. Maybe it will open at a premium, but I don't think it can really reach 1200 in any quick way. So this unlisted business is thriving all over the country, and because the stocks are unlisted, there is a lot of gap in the research on those stocks that is available. Of course, there is no price trends which are of any significant value available. It is all hearsay. It is all trying to create a FOMO about any stock. We've seen how some of the stocks, even Tata Capital and earlier Tata Tech, some of these stocks have really been pushed up very hard in the gray markets. Even stocks of Ola Electric earlier, and MobiKwik is the recent prime example. So recently, as Nitin Kamath also highlighted in his tweet, there was some clarification from SEBI. SEBI says that certain electronic platforms and websites are facilitating transactions in unlisted securities of public limited companies. These activities are in violation of the SCRA Act and SEBI Act. So the synopsis is that SEBI is warning investors against use of any electronic platform which is unregistered to deal with any unlisted securities, whether equity or debt. uh, it is also saying that any engagement with the unregulated entities is a violation of SEBI rules. Now, this is very um, unclear to me, at least, that this what does this mean? I mean, you could argue it both ways, but holding unlisted securities is no offense, but dealing with them outside the registered space is what probably is the issue. And of course, none of these platforms are registered with SEBI, and I don't think there is any current facilitation for them to register as well. So the point of view of SEBI remains that if you're doing any transactions on these platforms, then you are sharing out your information, and there is no recourse if something goes bad. So So transactions via unauthorized platforms are breaching the SEBI rules, and these laws which regulate securities market and protect investors, the SEBI Act of 92 and SEBI Contract Regulation Act of 1956, these are being violated. Uh, Electronic platforms are found to be facilitating unlisted securities trading. Why are they doing that? Because there is a huge margin to be made. Now, very recently, somebody was telling me that they buy, let's say, shares of National Stock Exchange, 1,000 shares, and let's say they are able to buy it at 2,000 rupees. They then sell it piecemeal to 10 different players of 100 shares each and are able to sell it at 2,500. So the kind of margin that is available for such players is huge. I mean, 25% margin in just warehousing and distributing again of these stocks. If these stocks or any scripts were listed, then there is no such margin available because it's a discovered price that is available on the screen here because of the asymmetry of information and non-availability and illiquidity of the system. Anybody can really ask you for any premium or discount. I mean, if the estimated price is 2,000 and if you want to go and sell it, maybe you'll get 20% less. If the estimated price is 2,000 and if you want to buy it, maybe you'll get 20-25% higher. So this is not in favor of investor protection and things that SEBI wants to do. And such activities, as per SEBI's observation, are unauthorized and illegal. Past warnings also in 2016, SEBI had warned against unauthorized virtual trading platforms, paper trading, fantasy games, because a lot of, mm, mm, for the lack of better word, innocent investors um, get trapped in all these, get rich quickly schemes. And unlisted stocks, while if the unlisted underlying stock has value, will create value for the buyer. But a lot of times, these unlisted gray markets are hyped up, and usually the investor is only buying at a much higher than the value price, and then you discover that the IPO has come at much lower price, or the IPO does not come. There has been cases, and I have suffered in those one of those cases in 2007. There was a company called uh, Sham Telecom, and they did a demerger of the infra company and the telecom listed company. And the telecom listed company, well, after demerger, never listed back on the exchange. So there was a lot of transactions that were happening on the gray market uh, as a pre-IPO, and people were buying it at 20 rupees, 25 rupees per share. And ultimately, that company did not come out with an IPO and merged with Reliance, Reliance Com, and the value that was realized for most shareholders was 2 rupees. So a massive sort of loss happened even in that case, where the gray market built up the price basis whatever projections were there. So because there is no proper research, because there is no proper liquidity, there are people who will get sucked into these games. Now, risk of engaging with unregulated platforms. So SEBI says that you conduct transactions in unlisted shares only through authorized brokers or their intermediaries, because at least there is some regulatory cover if something goes wrong. Because if you are dealing with a totally unregistered and unauthorized entity, then maybe you made the payment and the stocks don't come to you. I mean, who will you go for redressal of your grievance if that entity is not even registered with SEBI? So these are the kind of issues that do come around. And do verify the platform or broker legitimacy before investing. Avoid authorized channels to minimize risk. These are some of the SEBI's recommendations. Online platforms operated by SEBI registered brokers. So a lot of the SEBI registered brokers also have subsidiaries who will do in transactions in this. It is better to go with that. Uh, but SEBI's grievance redressal mechanism for unlisted shares may not be available to you. So this is sort of the issue that is there, that in case something goes wrong, because SEBI is not really regulating unlisted space, you really will have no recourse to get your money. I mean, even if you are a shareholder of a company that was about to list, but it doesn't list, then there is no recourse to that. You basically will have to deal with the promoter directly and get it sorted out, if at all. So there are inherent risks with unlisted space, just like uh, it's just like you buy, let's say, real estate without getting it registered, or you are doing it outside the system somehow. So this is a recent phenomena where unlisted platforms have really mushroomed, and because these guys have made tons of money in terms of the margin as they flip the shares and rotate it, um, it is almost like they've tasted blood, and more advertisements and marketing proposals will come to you for unlisted space. So deal with it with the knowledge that this is much higher risk than the listed space, and there is no guarantees or any assurance of the price that you're paying, whether the underlying stock is worth that much or not. So with these words, I want to know also what is your experience with trading unlisted securities, and what would your advice be for your fellow investors. Thank you so much for watching this, and do like and share these videos with your friends and family, and if you haven't so far, please subscribe to the channel. Thanks. Bye.